get to the auto sector now. The big headline is that the December auto sales have been largely disappointing. Also, remember, the government has now extended the PLI scheme for the auto and auto component industry by a year till FY28. What does all of this mean for the stocks in focus? Jay Kale, Senior Vice President Research at Elara Capital, joins us now with his call on the sector. Jay, hi, good morning. I want to start with the two-wheeler sector first because there's been a very varied numbers coming in there. On one hand, TVS Motors numbers were very good, but on the other hand, Eicher Motors disappointed with Royal Enfield. What would you do this month, or rather, what would you do on the stocks now?
Yeah, I mean, we have seen, and firstly, wish you a very happy New Year and the team at CNBC. Yes, we have seen on the two-wheeler side some varied numbers coming in from players. Mind you, Eicher was also impacted to a certain extent by the Tamil Nadu floods, but so to say, they should have kind of ramped up post that. We have seen some bit of pressure on Royal Enfield numbers since recent months, especially with the competition coming in of Harley and Triumph as well. On TVS's side, we've seen them coming from a very good festive season. So, the dealer inventory was at comfortable levels. And that has helped them in posting decent numbers in December as well. Even if you see Vahan retail growth numbers for December, they have been pretty encouraging for TVS as well as the industry. Yes, RE has struggled in this month, and I think going forward with capacities for competition in this segment ramping up, their numbers would be tested in the following months. So we prefer TVS over Eicher in the two-wheeler space.
I just had one follow-up question on TVS. You prefer TVS over Eicher in the two-wheeler space, but if you look at the valuations, right, TVS is now trading at 30 times forward. I mean, if you compare Bajaj, Hero, they're still at about 17, 18 times. Wouldn't you be concerned about the valuation, the valuations of TVS Motor now?
Yeah, I think, almost all stocks are now trading higher than their historical average. And even historical average, TVS has traded higher than the other two-wheeler players, mainly because of, the potential of high earnings growth with structural margin increases, potential of structural margin increase for TVS being there with their product portfolio and market share increase across segments happening. And of course, exports coming off a very low base now should, slowly and steadily recover. So, it is underpinned, the premium valuation is also underpinned by a relatively higher earnings growth for TVS going forward, and them being better placed now on the EV scooter side as well. So yes, valuations are frankly to a certain extent a concern for the entire auto sector, given that almost all OEMs and ANS are trading above their historical average. But from a structural business perspective, I think TVS Motor is pretty well placed.
Okay, that's TVS Motors on the two-wheeler pack. Jay, hi, morning and Happy New Year to you. What about passenger vehicles? Which stock would you back for 2024? We were just in conversation with Mr. Srivastava of Maruti. We were discussing how Maruti has doubled its SUV market share. They're talking single-digit, growth for the calendar year as such. What's your call? PVs, what's the best bet?
Yeah, I think, PVs, going forward, we've seen a lot of SUVization going. I mean, premiumization trend has continued for calendar year 2023. And, the strong order books for the companies were reflected in their SUV numbers going into the festive season as well. But we have seen, Maruti as a case, if I have to see, at least now we have comfort that their products in the premium segment have been well accepted in the market. A few years back, there were concerns whether Maruti's brand will be accepted in the higher price point segment. I think that is now well established that some of the products like Grand Vitara, Brezza, even, Fronx to a certain extent, that they have been pretty well established now with their SUV market share increasing. What is a concern for them, of course, is the entry-level segment is still declining. And I think we believe that is largely bottoming out currently, while SUVs will continue to grow stronger for them. But I think the bottoming out of entry-level car segment will be supportive of their volume market share as well. If you see, the revenue market share has far exceeded, the revenue market share increase for them has far exceeded their volume market share increase. But I think with entry-level kind of bottoming out, their volume market share should also get some support. So we prefer Maruti in the passenger vehicle space over here.
So Maruti for PVs for 2024.
PVs,
On a side,
yes.
oh, got that. Jay, on a side note, since this happened last evening, I just want to throw this at you as well. The extension of the auto PLI, right? There's a 1-year extension that's come through. Just give us your overall sense on purely from a stock point of view. Whether this could excite any of the majors, either the bigger companies or even the component manufacturers in the ecosystem. Would you watch for anything? Because there's this 1-year PLI extension now.
I think most of them, they've spoken of them applying, and approvals are in various stages currently for various companies. We've heard 1 or 2 OEMs speak about them getting approval. The others, this will add a significant cushion to their margins in the EV space, which initially will be very thin. We have heard about OEMs talking of including PLI, their EV margins being similar to ICE margins. So this is a significant component for OEMs when they transition from ICE to EVs in cushioning their margins and hence becoming more competitive in the marketplace. So OEMs who will get this PLI and get that approved as soon as possible will definitely have better pricing power in the market, especially in the EV space where margins are relatively thinner in the initial period.
Okay, Jay, we leave it at that. Thanks a lot for joining in. Appreciate your thoughts. Bye.